My name's Tyler. I'm from Insurance Advisors Direct. Here with Sarah from Liberty Bankers. We're going to go through here and she's going to give us a 101 basic outline of their new supplemental health plans. So with that, we'll go ahead and let Sarah get started here.
Well, good morning, and thank you for being here. And happy to go over more information on our brand new supplemental health plans. I'm Sarah Deal with Liberty Bankers Insurance Group, and I thought I'd just start out with a quick overview of who we are first, and then jump right into the products. So first of all, let's see, there we go. Who is Liberty Bankers Insurance Group? Well, we are a group of companies offering a full portfolio of annuities, final expense, Medicare supplements, and now supplemental health products. So today we're going to focus on the supplemental health. We did release the hospital indemnity plan back in July of 2023. And the last 4 products in the series just launched here in March. So a lot of brand new products to talk about today. And so we are a financially strong company with an A- rating with AM Best. And these 3 company names that you see here, American Benefit Life, Capital Life, and Liberty Bankers Life, are the names that you'll see out in the market that are all under the Liberty Bankers Insurance Group umbrella. And of course, service, we do like to pride ourselves in the ease of doing business with our company. You can call, text, email us for any information, pretty much any time of day. Stability. With the history of growth, you can be sure that your customers are in the right hands. And innovation. Our processes make your life easier. We have developed a digital underwriting process for all of our products, and especially if you're familiar with us on American Benefit Life or Capital Life Medicare supplements, you've seen our on-the-spot underwriting process. And what that means is on fully underwritten Medicare supplement business, you can submit an e-application and receive an underwriting decision within 3 minutes. So if you haven't seen that, be sure to check it out. And then once again, we do offer a diverse line of products to round out a full portfolio for you. So if you're contracted with Liberty Bankers Life, those are the products we're talking about today. What you want to do is go to agent.lbig.com. LBIG stands for Liberty Bankers Insurance Group. So agent.lbig.com, you want to sign up for a portal. And once you are signed up, it's going to ask you to link your writing number. So if you have a supplemental health writing number, a final expense, or an annuity writing number, this is the portal you would use. Our Medicare supplement is a different portal because we use Aetna as our third-party administrator, so they actually run the site for the Medicare supplement products. So this is where you'll go, and then I'll kind of show you later how what the quoting software kind of looks like, and we'll talk more about that. So let's jump right in to our Plus Series products. So we're just super excited about these. Again, hospital indemnity plan launched back in July of 2023, and the Accident Plus, Cancer Plus, Critical Care Plus, and Heart and Stroke Plus all just came out here on March 4th. And I'm going to show you the states that we are now available in, including Michigan. Michigan has all of these new products available. And as of March 14th, that would be yesterday, Indiana became available for Hospital Indemnity Plus, and then also for Accident, Cancer, Critical Care, Heart, and Stroke. We launched in Mississippi, Montana, and Tennessee on March 14th. So almost every week we're getting our state approvals, so new states are becoming available, and so that's super exciting. So this is our map. Okay, so I'm going to jump into first the Accident Plus plan. These are kind of robust plans, and so I'm going to show you a lot of detail today on these. And of course, you are available, if you want to ask questions as we go or at the end. I'm okay with either one. So first, the Accident Plus. Issue ages are 18 to 75, and we're actually one of the only carriers to offer an accident plan for ages above 65. And why is that? Because, a lot of accidents, a lot of falls, things like that do happen after the age of 65. So there is a 15-day wait period once you purchase the plan. So no coverage in the first 15 days. We offer rates to individuals, individual plus child, individual plus spouse, and family plans. Rates are gender specific and nicotine or non-nicotine use. We offer a 10% household discount, and all they need in order to qualify for that household discount is to have another individual living in the household with them, age 50 plus, usually a spouse. So 50 plus, and they qualify for the household discount, whether that person is applying for coverage or not. And as far as billing goes, you can see that we offer all kinds of different options here, including EFT, direct bill. Direct bill usually means paper bill in the mail, credit card payments, even list bill for groups over or 5 plus, essentially. So a group of 5 or more, you can list bill. Please note that we do have a $25 application fee. You can sell a 10-year rate, which is similar to a term life, 10-year term, essentially. So after 10 years, the policy expires and they would need to apply for a new one. Or you can have the lifetime policy. And lifetime just means that as long as you continue to pay your premiums, you always have the plan. It never expires. Now let's get into our base benefits. So you've got your accidental death and dismemberment. So for accidental death, you'll see that it pays up to $150,000. And these are options that you would pick during the quoting process. So based on maybe the amount you're willing to pay every month, you select, I'd like a $50,000 accidental death benefit. But it pays up to $150,000. For accidental death of a covered spouse, same amount. Accidental death of a covered child is up to $37,500. And accidental death in a common carrier is up to $300,000. And what is a common carrier? That's usually train, bus, airplane, something that is available to the public. And here are some base benefits here. Fractures, dislocations, burns, lacerations, eyes injuries, loss of limbs, loss of finger or toe. And I'd like to point out that benefits reduce by 50% once the policyholder becomes age 75. They reduce by 75% once the policyholder reaches age 80. And why do they reduce? Again, it's because falls are more common, accidents are more common for those who are over 75, or once you reach 75, that's kind of the most common accident that you see. So they do reduce the benefit, but they don't lose their policy. So they still receive some sort of benefit. And we do offer a travel companion benefit. Actually, all of the hospital indemnity plus, cancer, accident, heart, stroke, and critical care plans all have these same benefits built in. So you've got your travel companion benefit. It's offered when a policyholder is hospitalized more than 50 miles from their residence. An example of that might be, I'm in Houston. Our most common, when you get cancer or if, something major happens, people want to go to, all the major hospitals that are downtown Houston. For me, that's about 30 miles away. So this benefit wouldn't, be for me. But for somebody who, say, lives in Beaumont or in Dallas, and they want to come down to the medical center in Houston, this benefit could pay out. So what does it do? It will reimburse them for $100 per day for up to 10 days. If they have somebody, a family member, a friend that wants to come and be with them for those 10 days, $100 per day in a hotel setting. So they would need to have a hotel bill to turn in to be reimbursed for that $100 for 10 days. And then just like our hospital indemnity plus, we do offer a built-in pet boarding. So, most seniors have a cat or a dog, and we want to make sure that that pet is taken care of while they're away from home. So for up to 10 days per calendar year, we'll pay $50 per day in a boarding facility. I do know that we've got one locally called Pet Suites, And it's a pretty high-end one where they get their own specific room. They have a TV even. Somebody takes them out every couple of hours. But that one, it's pretty high-end. It's like $60 a day. So it covers almost the entire per day amount. So $50 per day is what we would reimburse for that. And then at the end, we're going to talk about the riders because all of these plans have the same optional riders. So we'll talk about base benefits first, and then we'll go over the riders. And then here you'll see kind of what the payout might look like for each individual thing that could happen to you. So we did pick some basic plans. We've kind of created some plans for you. You've got a basic, a premier, and an elite. But as you're in the quoting tool, you'll actually see that you can adjust any of these to a number that you're happy with based off of premium. So these are just examples of what the payouts could look like. So I'll just pick some random things here. Maybe broken hip. So that would be considered a fracture. You'll see hip, femur, pelvis here. So it could, on a basic plan, pay up to $2,000. On the premier plan, it could pay up to $4,000. And on the elite, up to $6,000. And remember that all of these plans are considered indemnity plans. And that means that the benefits pay straight to the policyholder. You don't want them paying to a provider. And the reason is because what if they've got health insurance or a Medicare Advantage plan on top of these plans. And those other plans are paying first. And so if you have these benefits pay straight to a provider and say there's only $1,000 left over from that the health plan didn't cover, well, they're not getting their full benefit. So say we owe the customer $6,000 and the doctor only needs $1,000. Well, the customer is losing $5,000. So you definitely want to make sure that they're receiving these benefits directly and not straight to a provider. And then, some other, just to kind of talk about other examples here, say you're in a car accident, you break or dislocate, elbows or wrist or any of that. So you're talking, anywhere from $500 payout to $1,500 payout. I'll say that I, during COVID and we were all home for 15 months, I ended up having, I had to get like 10 stitches in my shin for one accident. And honestly, I was cleaning my house, knocked over a candle, it hit the floor, it bounced up and, excuse me. So sorry. It caused my shin to break open. So I had 10 stitches there. So let's look at what that might have looked like. So that would be a laceration by stitches, sutures, or staples. So I could have gotten anywhere from $50 up to $150. I'll say that my out-of-pocket with my health insurance only ended up being about $80. So it would have covered all of my out-of-pocket for that. So just an example of little accidents that happen that you just may not think about every day. So that was our accident plan base benefits. And now we'll move on to our cancer plan. So let's take a quick look at just the basic little built-in things here. Kind of the same thing for what you saw for the accident plan, except for an expanded issue age range. So issue ages are 18 to 85 for all the cancer, heart and stroke, and critical care plus base policy benefits. So 18 to 85, these plans have a 12-month pre-existing condition wait period. So if they have had any of these, say cancer in the past 12 months, well, we're not likely to issue the policy because there are questions on the app that would kind of exclude that person for 5 years. But let's just say, maybe they had something like that. It's not going to cover any of that for the first 12 months of a policy. Okay, coverage types are the same: individual, individual plus child, individual plus spouse, and family plans. So 2 spouses and children. And then we've got your gender specific rates. male, female, nicotine and non-nicotine use. Same household discount. And of course, same rules. As long as they've got somebody living with them, age 50 plus, they qualify for that 10% off. And that goes for all of the different rate types. And again, billing options. You can do EFT, monthly, semi-annual, or annual, direct bill, semi-annual, or annual rates, and credit or debit cards, monthly only. List billing is monthly only. And again, you must have 5+ to list bill. You've got your $25 application fee. And again, a 10-year rate option or lifetime. And lifetime, again, just means as long as you continue to pay, you always have your policy. So let's look at what's based or built into the base plan. The cancer plan max can be up to $75,000 for ages 18 to 64. And you'll see here it changes for those that are ages 65 to 85 for up to $60,000. Carcinoma and situ, I'm not really sure how to say that one, but it pays up to 25% of their lump sum amount, up to $18,750 for our ages 18 to 64, and ages 65 to 85, it's up to $15,000. Experimental treatment. So this is interesting because we'll still pay the cancer lump sum 100%. So say they got $75,000, they have the max benefit. Well, if they are electing for experimental treatment, we will pay an additional 25% of the lump sum benefit. So that's up to $18,750. That's the max, additional on top of the cancer benefit. And then for skin cancer, it's more common, usually not so serious. We pay 1% of the lump sum benefit. So that's up to $750. A lot of times you can go and get those things frozen off or burned off and you're fine. That's, not for everybody, obviously, but so skin cancer benefit is 1% of your lump sum. And for covered children, it's 50% of the policy owner benefit. So say that the main policy holder elects for $50,000. For children, the max payout is $25,000 for that example. And something that is interesting for all of these plans is that we offer a reoccurrence benefit percentage. So what that means is, so say I paid a lump sum today, well, 2 years later, and 2 to 4 years later, we'll still pay 25% of that lump sum again. 5 to 9 years later, it builds back up to 50% of your original lump sum. And after 10 years, you have your full policy back. And why is that special? It's because a lot of cancer plans, a lot of, critical care plans, they just go away once you receive your lump sum. But on ours, as long as you continue to pay, you'll always have your policy. And then again, you receive just built into the plan, the travel companion benefit works exactly the same way as what we talked about on the accident plan. Pet boarding works the same way. And again, we'll cover some of those riders here in a bit. Since they're the same for each of these plans, we're saving that for the end. So let's move on to our Heart and Stroke Plus. So what we did here is we've created a plan that kind of has some of the most common critical illnesses. And this isn't called critical illness, and you'll see why in a minute, because we have a whole separate policy that has all the benefits. So this one we're calling Heart and Stroke. So you'll see here, heart attacks, stroke, coronary artery bypass, aortic surgery, heart valve replacement, coronary angioplasty, stent placement, all of these very common heart conditions are covered. Now, depending on what it is, it might be 25% of the lump sum, and you'll see here on the chart what those are. Full heart attack, full stroke pays the full lump sum. Up to $75,000 for ages 18 to 64. And for ages 65 to 85, that's up to $60,000. I mean, we all know somebody who's had stent placement or heart valve surgery. repair. So look at the amounts that we'll pay here for up to on each age category. And then, of course, I want to point out that covered child benefit is 50% of the policyholder benefit. So again, say they had a stroke and your benefit's 50,000. For a child, the benefit is 25,000. And again, built into the policy, you'll see reoccurrence benefit. What that means again is that as the years go on and you don't need to claim, your benefits are building back. So say after 10 years, you have a stroke again, or you have another heart attack, you get full benefits. So the advantage of these is that as long as you continue to pay, you'll always have your policy. And again, built in, travel companion benefit, pet boarding, and they work the same way with the same payout amounts. So now we move on to our Critical Care Plus. Critical Care Plus has all the policies built in. So you've got your cancer, your heart, and your stroke. You know, some people have these things run in their family, and maybe you're only worried about heart attacks, so you just buy the heart and stroke plan. But maybe you don't know. You've had all of these kind of somewhere in your lineage, and you're kind of worried about all of these things happening. So your Critical Care Plus covers everything except for, of course, the accident plan, which is, you'll see here in a minute when I show you what some sample rates look like. You can add that accident plan as a rider to this for almost nothing. So that's what I would do, is sell the critical care for those that might need this and add an accident plan to the back of it as a rider. So here what you're seeing is that you've got the cancer benefit built in. This looks just like our base cancer plan. And then you've got the heart and stroke benefits, and that looks just like our base heart and stroke policy. I'm going to show you the additional benefits, though, that you get with this one. So you're going to see here some of the things that could be common, you know, a coma. Say you've had something major go on and you're in a coma. It pays up to $75,000. Some of the things that might be common, you know, organ transplants. Say you had a stroke and now you have loss of speech, hearing, or vision. It's going to pay additional for those things. So here are your additional built-in benefits for the critical care. And I'm just going to point out again that if you have a child covered under any of these policies, the benefits are 50% of the policyholder benefit. And here are, again, some of the built-in things into the base plan. Same as all the rest. Reoccurrence. So after 10 years, you've built back up and you've got your full policy benefit. But say I had a stroke today and 5 years later, I get diagnosed with cancer. Well, 5 years later, I still have 50% of my benefit. So if I elected a 50% base policy, I didn't mean to say 50%. If I elected a 50,000 base policy, then in 5 years, I still get $25,000 payout. So if I end up with cancer or any of those other items, it's still going to pay you something. And then, of course, built in is our travel companion benefit, working the same way, $100 per day for up to 10 days per calendar year, as long as you're located 50 miles or more in a hospital away from your residence. And the same pet boarding built in. Now here are some base plan rates. So what we want to look at these accident plan rates. So say for 50,000 and I'm a 65-year-old. So if you're selling mostly to the senior market, I just always go to the 65-year-old. But I mean, I'm 39, so look at the 45-year-old rate. It would actually be cheaper for me than the 45-year-old rate, but $3.78 a month for 50,000 accidental death and dismemberment benefit. And of course, you know, all those other things the accident plan pays for, lacerations, burns, broken hips, whatever happens, like it has those additional lump sum benefits for all of those different plans. And then, of course, look at maybe, so 65-year-olds. So say you've got somebody who wants to add this as a rider or just have an accident plan because, you know, they're worried they're gonna fall or have some car accident or something happen later in life. 65-year-old for 50,000 benefit is only $7.61 a month. Or say you have somebody in their 50s and their entire family needs this plan. It's only $16.71 a month for 50,000. So again, accident plan you can add as a rider to all of the other plans except for our hospital indemnity. So I don't know why you wouldn't. But anyway, let's look at cancer plans. You know, that's something I worry about. So 45-year-old. What if somebody doesn't have major medical coverage and they're on a limited medical because, you know, maybe they don't get their benefits for 12 months after employment? So, you know, $23.76 a month, or you could even go with the whole critical care covers everything and then add an accident plan to the back end as a rider. So $47.94 a month plus $378, and I've got it all covered. Just something to think about. Very good rates. All of these plans were actually made to rival what's out in the industry currently. And now I just want to touch a little bit on our Hospital Indemnity Plus. So if you weren't around when we did the webinar for that specific plan, then this will be good for you to hear. We launched again back in July of 2023. Super proud of this product. We do have a comparison sheet available that has the two other most common plans sold in the industry that you can kind of compare, like what does ours look like? We're not going to name them by name on that comparison, but you can tell if you sell hospital indemnity already, which one is what. And here you'll see which states that we are currently available in. Light blue states is where the hospital indemnity is approved. Oh, wait a minute. I think they changed it on me. Sorry. Light blue means all the products are approved. So in Michigan, you're light blue. That means all the products we're talking about today are available to you. The green states have hospital indemnity plus approved, but we're still waiting on all of the other 4 new products. And then the dark blue states, there's only a few left. Those are the states where we have filed all of these plans in, but we're still waiting for some sort of approval. So 6 states fall into that category. And then the gray states are states that we don't plan to file any of these products in. Rules are a little different there. And so that would mean changing the plan to be something else. So we've decided not to represent those states. Okay, so let's look at the Hospital Indemnity Plus. Issue ages 18 to 85. And look right under that, no health questions for ages 64 to 68. That means during Medicare season, if you've got somebody new to Medicare or changing Medicare plans, what if they're leaving a Medicare supplement and deciding to go to Medicare Advantage? We all know Medicare Advantage has a little more out-of-pocket expenses. So there's a little more gaps there that, you know, kind of leave the customer more vulnerable. So during that time, when you're switching them to the MA plan, you might want to consider adding a Hospital Indemnity Plus plan. And I'm going to show you in a second, once we get through this plan, what the quoting tool looks like, because there's a way you can match a plan to their Medicare Advantage. Super slick. Okay, so Hospital Indemnity Plus has a 6-month pre-existing condition wait period. So once the policy is issued, anything pre-existing, if they are hospitalized for it, is not covered for the first 6 months. Okay, coverage types are the same as everything we've talked about today. Rates are individual, individual plus child, individual plus spouse, or family plans. Rates are specific to males, females, nicotine and non-nicotine. Household discount works the same way. It's available, it's 10%. As long as they have another person age 50 plus in the household, they qualify, whether that person's applying or not. And the household discount applies to any of the rate classes. Billing types are all the same: EFT, monthly, semi-annual, or annual, no quarterly. Direct to bill, semi-annual or annual. Credit cards, monthly only. List billing, monthly only, and it must be 5 or more to get a list bill. Still have your $25 application fee. And you have your 10-year rates or your lifetime rates. So let's look at what the base plan covers. So the daily benefit amounts range anywhere from $100 to $750 per day. And, today I've mostly mentioned seniors, but keep in mind, if you're selling marketplace plans, some of those deductibles are $5,000 and $6,000 also. A lot of exposure for the customer. So these type of things will help them if, something major happens. I'm going to tell you, February 2nd this year, I had emergency surgery. My appendix burst, and luckily, my deductible had just started over. It's the new year. I have a hospital indemnity plus plan. I got a great payout. It didn't cover all of my out-of-pocket, but almost all of it. So thank goodness I thought ahead and purchased that hospital indemnity plus plan. I'm only 39, so just throwing it out there because things do happen. Okay, so let's continue. So again, somebody with high deductible, any type of health plan can have this type of coverage. And if you're registered on our portal, you can access the quoting tool. Again, it matches hospital indemnity plan to a Medicare Advantage plan. And I believe they're working on hopefully getting all the marketplace plans out there so that you could do the same thing. It'll automatically know what the coverage is if you select that plan, and it'll suggest coverage based off those out-of-pocket expenses that the member is responsible for. All right, and so confinement periods, you can have anywhere from 2 to 10 days, a 15-day policy, a 20-day, or a 31-day. It restores after 60 days of not being confined in the hospital or December 31st. So we're doing benefit periods just like Medicare. So 60-day benefit period. So if I'm hospitalized today and I get out in 5 days, I've used 5 days. But after 60 days goes by and I've been home, I get all those days restored. Okay. Observation, 100% of the confinement benefit. So even if you are not fully admitted and you're in observation, you're still receiving your 100% of the confinement benefit amount that you selected for up to 10 days per calendar year. So if you selected $300 per day, you're still getting $300 per day in observation. That benefit is different in the industry. Most, you have to be fully admitted for 24 hours to start receiving benefits. So keep that in mind. Intensive care benefit pays an additional $150 per day for hospital confinement within the ICU. So again, if you have a $300 per day in the hospital benefit, if you're in the ICU, it's actually adding $150 to that. So you're getting $450 per day, and that's for 7 days max per calendar year. So even when your benefit period starts over, if you ever end up in ICU again that same year, it doesn't pay the benefit again. But again, that's a different industry kind of built-in benefit. A lot of other plans don't have that, so that's a great thing to have. Extended care benefit, so $25 per day beyond the hospital confinement max days. That's different. Mental health benefits different. So $175 per day for hospital confinement due to mental or nervous disorders, 7 days max per calendar year. And then again, you have that same travel companion benefit built in and the pet boarding built in. Okay, and so this is what I wanted to look at here. This is what, when you're in the portal, you click on the quoting engine, this is what you're going to see. So we've already done the first screen and kind of picked our state. We've picked female, age 65, non-nicotine user. We've picked a lifetime premium. So instead of a 10-year, we picked the lifetime. We picked a 5-day benefit, level at $350 per day. Ambulance services, we've picked the diagnostic service and wellness rider. and skilled nursing and hospitals, hospice for days 1 through 20. Urgent care and ER benefit, we've elected that. So this is kind of a robust plan. And the reason is because we have matched it to an MA plan that has gaps. So for this specific customer, we have a $94.36 premium per month. But again, that's because it's based off of a plan that we're trying to cover gaps on. You don't have to cover every gap if you don't want to, because you don't know what's really going to happen throughout the year. So maybe you don't need that ER and urgent care benefit, because there is some benefit in an MA plan. So again, completely customizable is the whole point of this. But you can see on the right side here, like ambulance services. So say somebody's on a high deductible health plan, it's only $2.44 to add that to it. And this is a 65-year-old. So if we're talking somebody in their 40s, 50s, it's going to be less than that. ER and urgent care benefit, again, $2.12 for somebody age 65. And then we're going to talk about the hospital indemnity automatic benefit increase rider very shortly, because I would be adding that to everybody's policy. So let's get into the riders now. Let's look at the riders. There's a lot of riders, and we're going to cover these in depth so you can kind of see, what's the benefit of having all of these riders. Mostly it's because it's optional, and we wanted this to be super customizable based off of each customer's needs and wants, and of course what they can afford. So you'll see here, like if you buy an accident plan, you can add the cancer, the critical care, heart and stroke, or not the hospital indemnity plus. So you can add any of the 3 other plans as a rider. If they bought a cancer plan, they can add an accident plan or a heart and stroke as a rider. Can't add the critical care because it already has the benefits of the cancer plan built in. So look at some of these, and we're going to look at each rider individually now. So what you see here on this screen, what makes these different is what's outlined there. They pay out due to sickness or injury. A lot of other carriers only cover these for injury. So sickness or injury, you get the emergency room benefit or urgent care benefit. You can have the ambulance benefit rider benefit. Good example. So I mentioned my appendix surgery in February. I had to ride an ambulance for 6 miles. I just got my bill. It's $622 that I owe. My insurance covered a little bit of that. But if I had this hospital indemnity plan, and I do, it covered $250 ground transportation. And it's due to sickness because I wasn't injured. But other plans would have only covered it if I had been injured. So got $250 towards my $622 that I am due. Okay, and then patient surgery benefit rider. You have lots of options here: $250, $50, $500, excuse me, $1,000 or $1,500 due to sickness or injury. Lump sum hospital confinement benefit rider, $500, $1,000, $2,000, and those are also sickness or injury. So I just wanted to point those out. Again, it's like 2 per year for each of these, except for ER is only 1 per year. 1 per quarter. So 4 per year on that one. So those are great. And again, you can see on the right side, this is available on all of the 5 different plus plans. You can add this as a rider, any of these things. Okay. So on this one, you see skilled nursing. You've got 3 different options here. Dollar amounts are different. You can see the amount of days is different. So maybe depending on what kind of coverage they have, you would decide on option 1, 2, or 3. These are available for up to 14 days per year. Okay. Outpatient diagnostic services and wellness benefit rider. I've been seeing this added to almost every new policy, and it doesn't cost a whole lot to add, so I can see why. But there's all kinds of laboratory tests, like flu shots, I think are included. I have shingle shots, things like that, that might, they don't cost a lot. Like they're usually like $25 vaccines or something, but some MA plans actually cover those things for you. And so you wouldn't have any out of pocket anyway, but you could get some benefit out of this rider. $25 for wellness benefits for 4 times a year. $50 for basic diagnostics. So if you need blood work for something and you're hospitalized and they want to keep running your blood, at least you'll get $50 to go towards whatever out of pocket you've got. And then again, $200 for outpatient advanced study diagnostics. The outline of coverage explains all of this, what's covered. So that could help you decide whether to elect this or not. Here are details on the dental, vision, and hearing benefit riders. So depending on which option you select, you can get either $400, $800, or $1,200 per calendar year. It has a $50 deductible for this rider. I know a lot of MA plans have some basic coverage, but this could help. Say they need a root canal or something and they owe $2,000. Well, maybe they've got a $1,000 benefit on their MA and they've got $800 here. Covers most of that root canal. Basic care it all has a 6-month waiting period. Just want to mention that. So you can't buy this with the thought of getting your root canal in 2 months. So you've got a 6-month wait period. And actually for major services, I think a root canal would be a major service. That's got a 12-month waiting period. I think basic would be more like something outside of a cleaning, maybe just a normal filling or something like that. And then I do like to point out the vision and hearing as well, since there is not a lot of Medicare benefit for vision and hearing. You do get a little bit here in this rider. Okay, and then outpatient therapy and medical device rider. I know the guy, Dave Peters, that works with us that created this product. He always says, add this to everything because it doesn't cost much of anything. But if you think about it, say, a senior falls and breaks their hip, you might need a little bit of home modification. That could include a ramp to get into the house because now you've got a walker or a cane even. It could include putting rails in the shower. So just think about that. It does have a prosthetic device benefit of $2,000 no matter which option you select, and that is only for amputation. So say you've got a diabetic who ends up needing to amputate, one part of their leg or something, then, we could help with $2,000 towards that prosthetic device. So just keep that in mind, optional item here. It also has occupational, physical, speech, and chiropractic therapy. So $50 benefit no matter which option you select. So that could come in handy as well. Now, this is what I mentioned earlier on our Hospital Indemnity Plus plan. This rider is only available on that Hospital Indemnity Plus. And if you're familiar with long-term care, you'll kind of understand what this is. So this is inflation, simple inflation. So say on the hospital indemnity plan, you picked a $100 per day benefit when you bought the plan. If you have this rider, next year it's $105. Year 2, it's $110. So it just keeps going up 5% from the original benefit every year. And, that might be something that kind of keeps them, maybe they don't think they're going to get hospitalized for 10 years and they've bought just kind of that basic $100 a day policy. Well, by the time they get it, their benefits before they need it, like in 10 years, that benefits now $150 per day. So that could be a reason for them to keep this plan because it just keeps building and it's not increasing their premium, but it's increasing their benefits. Now, also, this Hospital Indemnity Plus can be added as a rider on the accident, cancer, heart and stroke, and critical care plus plans. If they add the hospital indemnity rider, they also can purchase this rider for the hospital indemnity part of the policy. Okay. And then the cancer benefit rider looks just like our the base plan of the cancer plan, a little bit less benefit. It's up to $40,000, but doesn't cost much. So if they're buying an accident plan and they want to add a cancer rider, you can do that. And then you still have your reoccurrence benefit built in. So if they happen to use the rider, it does build the benefits back. Same for heart and stroke. Heart and stroke, you can add to the accident or the cancer plus plans as a rider. You can see the benefits are a little less than our original base plan, but what is covered is the same, and the reoccurrence benefit is built in. Same for critical care. You can add the critical care as a rider to the accident plus. So then, like I mentioned earlier, you have all 4 policies. You have all of them. And that's probably what I would do. Okay, and then of course, this is just carryover from the critical care, the additional items that we mentioned earlier, like coma or ESRD or organ transplants, loss of hearing, speech, or vision. All of that's still built into the rider, and so is the reoccurrence benefit building option there. So that's built in, they're not paying additional for that. And then the accident benefit rider. So, it's kind of looking just like our accident base plan with a little less benefit. So up to 50,000, children are 12,500 of benefit, and then death in a common carrier would be up to 100,000. And you can add the accident rider to the cancer plus, the heart and stroke plus, or the critical care plus. And this is a carryover on the accident plan. So of course, we're still covering fractures, dislocations, burns, lacerations, things like that, loss of hand, foot, arm, or leg. And here are the amounts that it covers. And you can see the optional income recovery rider that's built into that rider. So say they lost a hand, foot, arm, or leg, you'll see that it has an additional 26 weeks of income recovery benefit. And I'm going to look at that now and show you what that looks like. So these are the options you can select: $100, $200, $400, or $600. So again, 26 weeks of income. So if I selected the $200 benefit, I get $200 times 26 weeks for that dismemberment. Okay, so that's that. And then of course, the hospital indemnity rider, you can add to all of the other plus plans. So if I bought an accident and want to add a hospital indemnity to it, here are, it kind of looks just like our base plan. And all of the plans except for the hospital indemnity plus allow you to add a return of premium. So you can do a return of premium upon death, which is for people or issue ages 51 or more. And then for ages 18 to 50, it's return of premium upon death with acceleration benefit rider. So say they had to accelerate due to cancer or something else that happens, it actually takes that amount away. And so it has, you can see the calculation here at the bottom, but essentially they get like 50% of their money back. And who wouldn't want that? So there you go. Okay, so that was all of the new plus plans. And so I want to mention now that, each year we do have kind of a world-class trip that we take our top producers to. Top producers can qualify for Prague. So in the Czech Republic, super exciting. This hotel, the picture of the hotel that you see is actually where you'll be staying. It only takes 200,000 points to qualify, and all of the products we talked about today, except for the Medicare supplement, count 2 times. So if you sell something with a $250 annual premium, it actually counts as 500. So 500 points for that one policy. Okay, Medicare supplements dollar for dollar. And if you're contracted with us on the live side, say you're selling our final expense, it's also 2 credits per dollar, and annuities count as well. You can see that's a little different because, you know, annuities can be pretty large. You could write 1 policy and technically qualify for the trip. So they reduce the amount of points that you get on annuities. But this year is one of the first times that we've allowed every product in our portfolio to count towards 1 trip. Usually each division has their own. So all it takes is 200,000 points for an individual agent to qualify. And here you go. This is our team. I'm Sarah Deal. I'm the Central National Sales Manager, so you can see the states that I cover. Carlos actually covers Michigan. You'll see him on the east side. Delise Billingsley is our West Region National Sales Manager. I will mention, though, that, you know, like Carlos is out. He just had a baby last night. His wife had her baby. So he's not here, which is why I'm here for you. It's a good example of any of us can answer your questions. So be sure to take a screenshot, save this map, save, because maybe you're selling in other states and, you know, maybe you've got questions about Indiana or something like that. I can help you with that. But if I'm traveling and you're not getting me on the phone and you really need help right now, call Delise, call Carlos. You can even call Mariana or Dave and they'll help you. And this is our team. I do want to thank you for being here. Look forward to earning your business. If you have any questions, you're welcome to take yourself off of mute or type them in the chat. But also take my email address or my phone number and give me a call when we're done. And I'm happy to help.
All right, thanks, Sarah. So do we have any questions? You can lay them out in the chat. Or email me or Sarah after. And if it goes to me, if I can't answer, I'll relay it to Sarah and we'll get you in here.
Absolutely. Yes.
Great. All right. Well, thanks for attending, everyone. And with that, we have Sarah from Liberty Bankers. Thank you.
Thank you very much for having me today.